Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, July the 9th, 2015. And this is the daily report for gold and silver. And we are combining that with trending markets. To gold first, gold is currently trading up a little bit in terms of the Forex spot price, showing it up about $4 on the day, 1161.18. That, of course, is still actively trading. New York has closed. Settlement in New York was at 1160.20 with a low of 55 and a high of 66. So not much of a trading range, kind of a quiet day. In terms of the range within the Forex market, you had a low of 56.22 and a high of 67.80. So roughly the same. In terms of percentage gains, if we're going to take this as our uptick, you've got about 1/3%. Unlike silver, which has really shown some strong activity on the day. And when we look at it, we have a current price of $15.41, up really 1.63%, dramatic move up 24 cents on the day. Low 97.50 and high 52.50. So traders, I want to start today's show by looking at silver. Silver has really shown some resilience. It had a strong move to the downside. We anticipated that move. It actually went down below our basic forecast. Our forecast was around $15.10 and it broke below $14 at the low. But over these last couple of days, we've actually seen it come up substantially. Here, it's not quite a piercing line because it doesn't pierce the midpoint of this red candle. And therefore, today, you're not getting a confirming candle, because if we had gotten a genuine piercing line yesterday, meaning that this green body went and closed at or above the midpoint, even close to the midpoint, and we had this type of candle today, I would have absolutely issued a buy signal in the market. Now, we've seen so much pressure in silver recently that I really need to give it one more day. What I'm basically doing in my head is combining these last 2 days as a single candle to give us a piercing line. And if we get follow through, at that point, I would probably issue a buy signal in silver. A little note on as to why I've been combining trending markets and the gold forecasts over this last week. Realize, traders, that I created trending markets for my gold forecast subscribers. I haven't advertised. I haven't even sent out a press release announcing that this new service is available. I look at it as an ancillary service to the gold forecast. So when the metals markets aren't providing us the ability to catch some kind of trend, if we're trapped and range bound and I don't see good trades here, I want to be able to give you something to profit from. And that's why I've been combining the two reports. I will combine them probably tomorrow, but that would be the last day. And then we'll go back to separate modules, so to speak, come next week. But traders of the gold forecast, realize this was created for you, meaning trending markets. So as far as silver goes, we'll see what we get, but tomorrow we could easily issue a buy signal in the market. So traders, what about gold? We've had gold, we've had silver under extreme amounts of pressure. In terms of our current Elliott wave count, I'm going to need to pull up a chart. And the chart that we're going to utilize for our current Elliott wave count is just a daily chart spot market. And the way that we've been looking at it, of course, it's a bear count. So you've got a 1, 2, this long third wave down, wave 4, and then this fifth wave. Now, within this fifth wave, of course, you've got to count 1, 2, 3, 4, and 5. So you've got 5 out of 5 right now. Let me release that. So you've got a 5 out of 5. And so if that's the case, we are going to go into really what's called our counter phase right now, which is you've got an impulse phase, also called a motive phase, and then a corrective phase. This is that corrective phase. Now, when you're in a bear count, the corrective phase is something like an A, a B, and a C. The opposite, of course, of a bull count. So we would then, if that's the case, we're in some sort of an A, a B, and a C. And that means we could see this market clip higher. We could see it clip as high as maybe 1180. That's not really a tremendous move again, but if we're still within this bear market, and I have no reason to think that we're leaving that bear market, from there, we're going to go into a long 5 count down, 1, 2, 3, 4, and 5. And what concerns me is that where we would have thought there'd be some kind of move into safe haven precious metals with the Greek crisis going on, with the Chinese stock market literally falling out of bed, crashing something fierce, and really just now seeing that get somewhat alleviated, but I don't think they're out of the woods yet, so to speak. We should, I believe, have seen more of an upside bounce in the precious metals, specifically gold. Now, we certainly have not seen that as of yet. So I would think that any upside play is going to be very short, and we want to sell the rallies rather than buy the dips in gold. So traders, in terms of some of the other markets we're following, and this goes into trending markets, we are making a play in the dollar as well as the euro. We're long the dollar roughly at 95.60, currently trading at 96.50. So we've got about a full point on that trade. Markets up slightly, up about 0.22% and up 21 points on the day. Now, in terms of our targets that we have, my sense right now is that, let me get the proper tool out, but right in this area, just below 98, I believe that it is roughly at, call it 97.60, so maybe another 100 points from here. We absolutely do have the potential to see resistance as the market comes back to this top. Our resistance points are here. They're just above 98 here, and then 100, of course, which is where I think this market over time will head to. It's just, what will it take for it to get there, and how long will it take for it to get there? And the whole idea behind trending markets is to be able to catch these long moves, these extended moves in the market, and really profit from them over a period of time. In other words, to be active in a trade for 3 weeks, 4 weeks, 5 weeks, and have it continually move further in the direction, your anticipated direction in the market. So I do like the dollar. I continue to like the dollar from the long side. And as I said, the first level of resistance that I think we're going to hit is probably going to be around 97.50, 97.40. So that's still 100 points from where we're at. Next market we seriously want to look at, of course, is going to be the euro. And the euro is trading lower, off 43 points at 110.30. We are short at 111.65. I think we still have some room to the downside, especially with the scenario that's brewing with the European Union and Greece. I think that we're going to see that market continue to be under pressure. And when we take a look at it, these are half a day Japanese average candles. We can see that we are still in what I'll call this defined shallow channel down. There's no doubt about that. However, we're not getting a real clear cut move in the market as we did here, or upside moves as we do here, where we get consistent candle after candle of the same color. You notice that what we have seen is really alternating candle, but really we saw it go to the top of this channel, and now it appears that it is moving back down. So we're going to look at these channel lines as our short-term support and resistance. Traders, lastly, we do have a play in the euro. We have a play in the dollar. We talked about getting into the oil market, and I'm not really convinced yet. I talked about last week that I thought it was going lower. It is up a little bit today, but we've seen it trade dynamically lower over the first part of the week. And really what I noticed more than anything else was we had this consolidation roughly at call it $60 per barrel. We're looking at a weekly chart, and that's why you don't see any kind of a rise, even though it's up today. But just look at what we've seen Monday through Thursday. We've seen a dramatic decline. It's fell to the 50% level of this rally here. And the reason that that is important is if we're looking at some sort of an ABC, this being the A, the B will typically be anywhere between 50 and 75% that of A, and then you'll get your final C up. What that's telling me, the fact that we're up today is not really indicative of where it's going to go, but what I see as a real possibility in oil is that we have completed this B wave here, and this is our A wave here, of course, and then this is our final C wave that we're looking at. And so the way that I would look at it really is that what we have seen now is that A, completion of B, and some sort of C. Now, if that's the case, we should see the market climb above $65 per barrel. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review and the weekly wrap-up. Bye-bye.